Hi traders and welcome to the technical analysis market wrap on Friday the 24th of February. So I've seen some really good moves in the market this week. A lot of the majors have really pushed on and hit some of the targets that we were talking about. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD on the daily chart, and as you can see, we've certainly kept pushing down, and we're sitting we're well and truly in the 67-cent mark now. So starting to look really good for the move down to the low 67s. Look, yeah, this was always starting to weaken off here. Like I was actually explaining this the other day. It was effectively a head and shoulders pattern, but even without the head and shoulders pattern, what we did have was a lightning bolt effect. We hit the resistance here at the 71-cent mark. Clear resistance, so there was going to be always trouble getting through that point. But once it did sell through and get past the 20 moving average, you could see it bounce straight onto the 68.80 area and then straight up back to the 20 moving average, which is the classic reversal trade, really. Once it got to this level here, you could see the reversals. It hit the 20 moving average, and also you can see here the next point of resistance was going to be the problem, which actually formed the next shoulder, and then it did sell down and continue on. Now, it's broken past the 50 and another that roll reversal again. You can see when it tested it, went up to the previous one, came back down and basically broke it, and now it is breaking the 200, which really, look, it's going to be gravitating really down to the 67.20 mark. You would think, nothing short of a miracle would probably stop it from getting there. Now it's starting to look really weak. Dollar index is looking strong, so a lot of these pairs are going to be probably continuing on. What it would need to do in terms of actually going long now, it's going to have a reversal of a reasonable time frame, and I'm talking about potentially a 4-hour. Basically, it's a higher low sequence. And if we don't get that, we're not even going to be interested in going long on the Aussie, because this momentum has certainly kicked in. We've got the absolute lightning bolt, change of trend, no question about that. So really, our definite target of the 67.20 in the first instance on the short, we're looking for that target. If you want to try and get involved in this, you're going to go to the smaller time frames now. If you're not already in it, you've got to go to the smaller time frames and look for pullbacks to the 20 moving average, say on a 1-hour chart potentially, to keep continuing on. But yeah, I would be looking for shorting opportunities down at the 67.20 and a reversal of a 4-hour, so a series of higher highs and higher lows on a 4-hour chart, and then you'd be looking to move back up to the previous resistance, which was 68.80. So yeah, pretty much trending in the right directions, and the levels are holding up, but just beware, all of these levels are very key to this one. So if you're trading whichever direction you're going to, just be mindful that support and resistance is never going to be far away, and they do provide very good targets in those instances. All right, we'll jump into the US dollar CAD now, and yeah, again, we've seen a break here of a very important zone. As you can see, this level here around that 135.20 was very strong. Yeah, last week we talked about it, testing it, and now it's actually broken through again. Yeah, and look, how you trade, a lot of people say, how do you even trade these when they do actually break through? Well, you have to go to the smaller time frames, of course, to actually take advantage, because if you see that, look, if you were awake as soon as that broke through, sometimes the first break isn't always the best trade, but if you were there and you were wanting to look at it, you'd have to go down, say, even to a 4-hour, like a 4-hour would do the job. You can see that we're already in a series of higher highs and higher lows. As you can see, we're approaching that resistance with a reasonable amount of momentum. You can see the low, the high, the higher low on the 20 moving average, which is what we always talk about. Then the high, testing the resistance again, back down to the 20 moving average, which is the classic lightning bolt, and then up we go again. So if you, obviously this is not the one you want to be getting involved in, but when it did come back down and test the 20 moving average again, this is the one that really gets you. Like, you've got the roll reversal test from the top, you've broken through, you've come back down, you've tested the roll reversal zone from above. I talk about this a lot. And you've got a 20 moving average to boot. So realistically, you've got a lot of things going for you. You've got all of the patterns working in your favor. You've broken through the roll reversal, and you've got a 20 moving average to help bolster the support. So, this trade here wants to touch a 20 moving average up to around that 135.60 area. That's a pretty easy 40 pips, and you're aiming for that first target anyway. So, I mean, really, can it go longer? Well, of course it can. It can go basically all the way to 138, without a hell of a lot of trouble. But in the first instance, if you're scalping, where you really want to be is in this easy money zone. This is what I call the easy money zone, because it's only testing what it's already just previously done. Okay, so it's a very easy scalp from there. Can it go longer now and continue on the higher lows? More likely, but that's the easy trade straight up to here. Whether you're taking a partial out there or whether you're continuing on, it's totally up to you, but that is the easy one. Now, anything short of breaking the 20 moving average on the daily now, I'll go back to the daily. You know, it's a long way away. You can see we have to get back, basically roll down, close below 134.80 before it even gets me even thinking about shorting on this one. Now it's looking very strong. It's broken through. So unless we get a reversal of a real significant time frame and we're trading and closing on a daily below 135, so I'm talking about the 134.80 or lower, even then I'd still be careful. I'm not really keen on shorting this one at all. You know, and then effectively if it does, you're aiming for the 20 moving average. So, you know, pretty straightforward trading, but I think really good trading on that one. All right, dollar in, we'll go US dollar yen. Obviously, yeah, this is just continuing on its merry way. Still at the resistance, like we said, we talked about this last week. Yeah, this was pretty easy to basically predict because it was going to go to the next roll reversal zone, 134.80. You know, ironically, the level of the CAD where we needed to go if it's going short. But again, yeah, this is one of the ones where, yeah, effectively, if it pushes up a little bit higher, we're going to start aiming for the next 138 zone. Very similar in how these ones are setting up. As you can see, if it rolls over from this point onwards, the easy trade is down to the 20 moving average, which is the short on the daily. So if it does curl over, 20 moving average is going to be a target wherever that may lay. So at the moment, it's around the 132, but realistically, that's where we're aiming for the short. But if it continues on, I would be waiting for this to test, like similar to what the CAD did. I'd wait for it to break through, test from above, and then look for long opportunities up to the 138 or the 200 in the first instance, and then up to the 138. So again, though, pretty good trading, as you can see, very similar to how the CAD was in terms of the breakthrough, but just wait for it to come back down is my point, really, if you haven't already taken this long, because it was looking very strong from this point onwards, and we definitely have got the higher high, higher low sequence as well. Just be mindful of the resistance right in front of it. All right, dollar index time. And yeah, again, no surprises here. You can see it's trying to break up to a new high. The 135 is the ultimate target for this one. I mean, well, for now, that's the scalping target. Once it gets to there, it's going to have a good think about it, obviously, because we've got previous peaks at the resistance and support right through there. And then you've got this big area of consolidation right at that point at around the 105. Very important zone for it. But realistically, MACD switched up now. Moving averages are about to cross. So, you know, the euro is obviously the trade that benefits from this. So we're going straight into the euro. And as you can see, it's just been a bit of a bloodbath on it. Pretty easy trading, really, though. You know, it's been basically pushing down on this support, yeah, for quite some time. I did talk about it last week. If that support was to break, yeah, this was going to be in trouble, and it did, just like the dollar index went up. And yeah, realistically, similar to the Aussie in a sense, the 105 is 105 sort of 20 area. 30 area is calling it. It's gravitating to it like a magnet, and it's difficult to see it stopping before it actually gets there. You're about to get a 20-50 moving average cross on the daily too, which hasn't happened basically since 98, which is a long time ago now. So, and we're in a downtrend. There's no question about that. This long-term trend has been reversed, and we've got a series of lower highs and lower lows. This is not the most perfect lightning bolt you've ever seen, but it certainly has considered that level and broken through. The only way we're going to be able to trade this now, in my mind, is effectively shorting it with opportunities to pull back up to the 20 moving average and then short down to around that 105.30. With this being the ultimate level of take profit, I'd certainly be looking at that as a key marker. But if it does reverse at this point, yeah, basically up to the 106.60 is going to be a very strong reversal. And really, if the 20 and the 50 catch up, the 20 more likely. If that gets there as well, it's going to form a very strong level of resistance. So unless it breaks through those points, I'm not interested in going long on the euro. But if you want to scalp it long, and if you want to do a sneaky scalp, and you think you've got a smaller time frame change of trend, say on a 1 hour or 15 minute, that's going to be a target on the way up, okay? But I'm not interested in anything longer than a scalp until it gets above this level here again and closes above the 20 moving average, and that seems like a long way away. Of course, it can happen, but yeah, I'd be looking for a scalping opportunity long. If you get that higher low sequence on a 1 hour or a 15 minute, you might get a sneaky 50 or 60 pips from a scalping point, or scalp it down to here. But you can play it both ways. But yeah, just be mindful of those two levels, very important. All right, and the last one, the S&P 500. Well, yeah, this has done its job. Double top at a roll reversal zone, at a very important zone. Broke through, as you can see, it's basically fulfilled its potential. A double top is effectively that. distance there between those two red lines, projected out once it does break through. You got your break there, you got a ejection there, but then it came through and broke through properly, broke the 20 moving average. When you get a head and shoulders with a 20 moving average supporting the neckline, it's always going to be a pretty good trade. And this has been fairly technical. It's landed on the 50 moving average now. Look, the 39.80 to 4,000 level is a pretty strong level. So, it wouldn't surprise me to find a little bit of support here and maybe bounce up. The way you'd probably be trading, that pattern's certainly finished. The way you'd be trading it now, though, is looking for a move potentially up to that 4,770, which is also the 20 moving average. If it does that, I'd be looking for a rollover at that point. If it does start to weaken, then the easy money again would be back down to this level. But of course, if it continues on and breaks past the 50, then the next real target is around the low 3,900. So you can see here, this is the next very important support zone. You can see it was roll reversal, support and resistance all the way through. It's a very, very important zone, 3,900, one of the most important actually in recent time. So this is probably where it's going to gravitate to if the shorts continue. So right in the middle of the zone, you could be looking for 3,900 moves or 4,080 moves, which is bolstered by a 20 moving average. Both of them will play out for you if you get a momentum shift in either direction on a 1 hour. So that's the way you want to play it. Look for shorting opportunities if the pullbacks come to the 20 moving average, and potentially if it reverses from here and starts to strengthen up and we get a higher high, higher low sequence on a 1 hour, maybe look for a move up to the 20 moving average and the 4,080, which is really good trading. So hope everyone's had a great week's trading. I think the setups have been fantastic from a technical standpoint, and we've had some really good levels hit, and we're well and truly rocking and rolling on all the things we look at. So hopefully you've been able to take advantage of some of those moves. And have a great weekend. I look forward to seeing you all next week.